Perhaps it's just a coincidence that Paytm's IPO opens on 8th November. Exactly 5 years ago, there was an event on the 8th of November that, in a sense, changed the fortunes for Paytm. Demonetization forced millions of people into digital transactions almost overnight, and the biggest and perhaps only significant player on the block was Paytm. Within a matter of a few weeks, everyone had an account or knew someone who had an account, and the way we transacted had changed. Well, whether that's sustained or not is a debate for another day, because 5 years down the line, there's still more cash in the economy. But digital transactions have no doubt moved to the next league. Is Paytm still at the top of that league? Is Paytm's IPO, which is the largest in India so far and opens today to a lot of interest, worth your while if you're an investor? Is it a short-term buy? Is it a long-term buy? And what does it say about the space we're in, that all of the most exciting IPOs are in the fintech category? To speak on some of these things, I'm joined today by two very interesting guests who have been tracking this space. Welcoming now is Deepak Shenoy, founder of Capital Mind, and Aditya Kondawar, Chief Operating Officer at JST Investments. Welcome to both of you, and thank you so much for speaking with us today. Deepak, let me begin by getting your take on Paytm. The simple question truly that people want to know about is it worth their while investing money in this?
Hi Tamanna, and thanks for having me on the show. This is a pretty much a path-breaking IPO, and to be fair, I have we're biased towards Paytm. I've known the founder for a long time. He's helped me start Capital Mind as well. But having said that, I think Paytm is as a traditional metric business, $20 billion of valuation. Very expensive from all metrics that you would normally use: price to earnings, price to sales, price to anything really. But if you think about this as a business that is actually exploring a landscape that is relatively new, today we've got $100 billion of UPI payments in the country. About 6 years ago, when I was starting to track the UPI space, or before just about UPI was very popular, there was IMPS. There was only about 8 or 9,000 crores of transactions per month. And today there's 800,000 crores of transactions. So this is a space that's exploded literally in front of our eyes. We've seen this grow from what was earlier, they said, you have to use cards, you can't get away with card fees and merchant fees and all that, to a point where in India you don't pay anything to anyone to transfer money now. You can do UPI, you can do NEFT, you can do RTGS, and Square in that process is a Paytm which is started from a wallet, which is what it was, to now a UPI player and a payments bank, and perhaps a bunch of other things as well, including broking and in the investment space as well. So I think from here, the idea would be to only invest in a company that can explore a much larger landscape. And even if you think it's really expensive, and the fact is that all IPOs seem expensive at the beginning, so did DMart at 300 rupees, and now it's at 4,500 rupees in 2 years. The idea shouldn't be to bet your house on something like this. It would be to make small bets in high growth industries and then increase your investments over time, rather than look at valuations today and just never invest.
Yeah. Are you as bullish, Aditya, on Paytm? What is really your take? Aditya, do you agree with what Deepak is saying? What is really your take? Do you think the valuations justify the kind of interest we're seeing in Paytm?
So hi Tamanna, thanks for having me, and some really great insights from Deepak. So Paytm, the Paytm IPO is really a dream come true for a lot of startup founders, and of course for the founding team, right? It's a watershed moment for the startup markets, and I personally salute VSS for bringing the company to an IPO. So the company started off as a utility payment and a top-up company, right? And today it has morphed into a full-fledged fintech company that does everything from, say, insurance to broking to wealth tech to bill payments. Like Deepak said, the company is extremely expensive, by all metrics. But, when I talk about the kind of customers that they have on the platform. They have 34 crore users on the platform. They have annual transacting users, which are close to 12 crores. They have a 2.3 crore merchant base. You walk into any Kirana and you would see the Paytm point of sale box machine over there. Whenever you pay that, the machine would say, okay, 100 rupees प्राप्त हुए. So Paytm has done really well. It is a household fintech name. It has really put India on the fintech map. But leaving all of that aside, when we talk about the valuations, the company is demanding really lofty valuations at 47 times price to sales. And when you actually break down Paytm into sum of parts, when you look at each one of those pieces, we see that Paytm faces competition in each one of those. Now, for example, when we talk about payments, right? So UPI has really disrupted the market. I really feel that UPI has been the real fintech win by the government of India, since it is owned by NPCI. Trillions of rupees of transactions taking place through the UPI platform every month. And then when I talk about broking, of course, we have the grandfather over there, which is Zerodha. When I talk about insurance, there is Policy Bazaar and the legacy insurance players, which are, they're just chilling, they are happy with their sales forces. And of course, when I talk about, say, payments, then you have Razorpay, Stripe, and the likes of it. So every business of theirs is facing competition. So keeping in mind all of that, we are a bit cautious on the IPO. We would really want to see how the competitive intensity plays out in each one of the segments, and then we can take a call.
That's an interesting point, Deepak, and I'd like you to come in on that. I started this discussion by referring to Paytm's shining moment, I would say, when after demonetization, they were the only option and the only clear option on how to transact digitally. And since then, of course, digital transactions are in the next stratosphere. But have they managed to build enough of a moat? Whether it is on digital payments front, whether it is competition from something like UPI or from insurance companies or from broking companies like Zerodha, the whole list that Aditya mentioned. Do you think that that value proposition has not been held up to that extent?
Of course not. I think, I don't think this is a mature player in the sense that they are in the early stage. They're going to make a lot of mistakes. They're going to probably write off a lot of their investments in businesses that they have already invested in, because that's the nature of a startup. You'll do things, you'll kind of fail in some, succeed in some. The Soundbox, they started off as a wallet. They moved to UPI very fast. If they had stayed a wallet, they would have failed, because the wallet itself has lost prominence in comparison with what UPI could be. But what they did in UPI was a different approach from what Google Pay and PhonePe did, which was go after retail individuals. They went after the merchant category. And then they're, I think, one of the largest merchant level of transactions that opens them up to potential future business. And I talk about it right now, but it's probably in the works. They're talking about lending to the merchants, because the merchants are on their platform. They can see their credit. They'll be able to lend to them better. They can't do it right now as part of the bank because the payments bank does not allow them to, but they can build up something in the small finance, build up to a small finance bank at a later stage. And if they get a license to do that, they have the ability to monetize that as well. I don't think any of what they've built is a moat. In the tech world, moats are very temporary. You have to keep innovating in order to keep your moat alive. And I think that part is where you have to bet on the management to do. Versus their competition, some of whom is as strong as them, but some of whom I think will fall by the wayside in comparison.
So so you're basically saying, in a sense, this is a bet on Vijay Shekhar Sharma and how his vision has really played out. And there's no doubt that that's a fabulous story right there, and his journey is fantastic. Let me talk about the other elephant in the room. And I know that talking about profits is not fashionable when it comes to new age tech startups, but at some point it starts to count, doesn't it, Aditya?
Absolutely. So, whenever we talk about these tech companies, we tend to hear from a lot of investors is that, you guys don't understand tech. But, the biggest challenge for a tech company is tech itself, when I talk about, say, China, right? So in the past 2 years, we have had a lot of giants replace the legacy Baidu, Alibaba, Tencent of China, right? And that was only possible because of tech. So the whole point of it is that, people are trying to find the next Amazon or the next Alibaba or the next Tencent, right? but it's very risky. The tech itself is going to replace tech, and as we have seen with a lot of recent IPOs, managements really shied away from answering the profit question. They did not even acknowledge those questions, or they straight away said that we're not going to entertain this question. So in that case, it becomes really confusing for an investor to find out, how the company is going to pan out. For example, if we have to really boil down Paytm to what it does, it acquires customers and it tries to give them access to a whole suite of services, right? It started with mobile top-ups, then utility payments, and wallet, BNPL, credit products, insurance, and the likes of it. So, Paytm has to keep pivoting themselves to be relevant in a ever-changing market, which has a lot of tech prowess and a lot of capital flowing around the world. And, if you are investing in Paytm, then you have to really keep a track of all of that. It's not just that the numbers, you have to keep track of all the pivots that the company will do to stay relevant.
In terms of why people are so excited and this whole current scenario, Deepak, one overall point of view, it's a lot of it is FOMO as well. And people want to actually discover the next big companies, the next, Amazons and Facebooks, etc. And they know that this opportunity is finally there for Indian investors. How would you recommend someone navigates through these slew of IPOs?
So, I think to a certain extent, like I've said, it's a bet on management. In Paytm's case, it's a bet on management, a bet on Vijay in Paytm's case, or a bet on the founders in Nykaa's case, or any of these things. The idea, I think, is this. You're looking at a large landscape and a much higher growth potential. We're looking at something that's going to grow 5x, 6x in the next 10 years as a market. I'm not saying each company will. And you're betting on the company that's in that market to gain market share from either the existing players or just because the market is expanding at that massive rate. So it allows for growth such as 5x or 10x that can happen in the next 5 or 10 years. But all of this will not happen overnight. It will take a series of steps. Like in Paytm's case, I would say they need a small finance bank license, they need an insurance aggregation or an insurer license directly. Each of these steps adds another positive influence into future potential earnings. And I think if an investor is looking at this, they would have to spread their investments across many such growth companies and then increase their bets wherever the founders or the business add more performing categories, instead of looking at it and saying either I will not participate at all, or just going FOMO in and saying I'm going to put all my money in and I'll buy my next house from the profits. This is not a business where you can do that. This is not a time when you can do that, because there is just way too much froth in the market.
Yeah, absolutely. You have to have a balanced point of view as you negotiate this territory. Aditya, you want to add to that when you're seeing this slew of IPOs coming in? I doubt a lot of people will want to sit by the sidelines. After all, the complaint all of these years were that these great Indian companies are not sharing that wealth with Indian retail investors. Now they finally are.
Yeah. So, Tamanna, it's very interesting that you asked that question, and in the past 18 months, the new investors have only seen one-way rally, and that is upwards, right? And, I was just going through a few presentations, and they also pointed towards the median age of Demat account holders coming down. So these are all millennial crowds that is coming in the markets, and these are people that really associate with these brands. So one of the reasons behind a lot of recent IPO successes can be because, a lot of millennials connect to Nykaa, say Zomato or Paytm. And, what they have really seen is just one-way rally. They have only seen IPOs getting doubled, tripled. A lot of them are thinking that, IPOs are a sort of lottery tickets, who does not like to be a part of a hot startup, right? And I think a lot of this is influencing them to get into these IPOs.
Yeah, you have to make that choice very closely and don't bet the bank. Spread your risks and see what works. Meanwhile, all eyes on Paytm, which has had quite an interesting and good start to day one of its IPO offering, and coincidentally 5 years exactly after demonetization. Thank you so much, Deepak and Aditya, for joining us today.
Thank you, Tamanna.